Hi, it's Brian Decker with your Market Minute. I want to talk to you about the value of a financial advisor. We have many sayings on Wall Street. One of them is that you can save a lot of money doing your own dentistry, but it's not recommended. And of course, the object of that is pretty obvious. I would point out that there's 6 key things that a good retirement planner is very valuable for. And the first one is to have a plan. A lot of people think they have a plan. When they come to us, we show them what a plan really looks like, and it's night and day. So the first thing is to have a plan. If you have a plan, that takes away a lot of the fear in retirement. And the number one fear of people over 60 years old in the United States is running out of money before you die. So number one is to have a plan, to see your income and have it show your Social Security, any pension or rental real estate income, portfolio income, total it up minus taxes, so you can see how much you should spend to stay on track to have your money last you a lifetime. Number one, have a plan. Number two is tax minimization strategies. And here at Decker Retirement Planning, I'm so proud of our planners. We work very closely with the other CPAs, and we try to think of everything. Donor advised fund, charitable remainder trust, quadros, irrevocable life insurance trust, net unrealized appreciation, dynasty trust, cost segregation. The biggest one, most widely available and blessing the lives of many people, most people in our country, is the Roth conversion and how to do it correctly. So all of those are key strategies on how to minimize your taxes. Another one is just employing tax deferred, because you want to do 2 things at once as you go into retirement. You want to minimize your IRAs going into your required minimum distribution years, and you want to maximize your Roth conversions also. So doing 2 things at once is really important. The third thing is risk reduction. Risk reduction, most people have a 60-40, 70-30 portfolio with 60 or 70% of their portfolio at risk. That's the advice of banks and brokers. We think that's insane. In retirement, you want 2 things. You want income coming from your portfolio, and you also want to have risk growing and backfilling, so that in 15, 20 years, you've spent, let's say you start with 1.5 million, you spend that 1.5 or more in the first 20 years, and then you have that risk piece component grow and replace what you started with. It's like shifting into second for the second half of your retirement. So risk reduction, there's a right and a wrong way to approach the risk markets. And that's another thing, choosing the right strategy. We believe that we've gone into a flat market cycle. So any buy and hold passive investment strategy, if we're right, is not going to do well over the next 15 plus years. The next one, the fourth one, is portfolio optimization, making sure each part of your portfolio, the principal guaranteed accounts for cash, 3-year, 5-year, 7 and 10-year principal guaranteed accounts, are growing the fastest they can, highest returns net of fees, and the risk strategies also are optimized. Number 5 is income optimization, net of tax, your monthly income. Want to see that number as high as possible. And the last one is fee minimization. Most people pay about 1% for their fees. Our clients, on average, are paying about 60-70% less than that. So these are the values that a good financial advisor brings to the table in constructing for you a proper retirement plan. This is Brian Decker. Hope you have a great rest of your week.